What's up, guys? I haven't done a little video in a while, so I'm going to do a couple today. So starting off, this is Snowflake. A buddy of mine pointed it out to me. I saw this IPO happen, and, I didn't want to buy it because I thought it was a little expensive off the start, didn't know much about it, and it didn't really have any chart settings for me to show. So now it's kind of gathered some chart information, which is good, so we can go off of a few things. So the first thing I usually do when I'm looking at a stock and wondering where am I going to purchase, how am I going to not buy the top, is I take on the weekly time frame and I grab a couple wicks that coincide with each other. So in this scenario, we have two wicks here, and I'm going to line both of them up and run it straight across. And wherever it lands, it lands. And usually where it lands, it shows you some pretty good resistance points. And this is kind of how charting works for the most part anyway. So I could take a fib retracement here, and I could put it from the swing low to the swing high and figure out where we have some support and resistance at. So if you look here, we got the 0.618 at 291.62, which we did get a little wick below and we bounced off it, but the next support down is looking at 255.11. So that's just something to help keep in mind. It's a good, useful tool. But the next thing we're going to do is we're going to find the lowest support here. So we're going to find the first wick, run it straight across to the second, and just let it run all the way across. And that's going to give you your next support down. So, we could buy this big giant wick in this big crash, but it's not really a smart idea because you got all this ways to come down potentially. So where I would be buying most likely would be around the 256 area, 256, 257, and if you wanted to put a stop loss to protect your money, you could put it below at 254 or 250 depending on your risk to reward ratio there. And then lastly, we have a couple support wicks here, 1, 2, 3, 4, 5 right here. So this is going to be pretty good potential for another bounce depending on how everything looks when it gets there. So, depending on how excited you are to get in, you could take a bite here and put a stop loss below this line, and then now you have your resistance, your two support lines, which we're pretty close to touching it. We still got a little bit to go, looking at 275 area, and I think it's at 281 now. So, and if it was going to be the following week, it might even be a little higher, 278. So we are pretty close to it at that point. And then you'd have to put your stop loss below at 275. So, this is pretty simple stuff because there's not a lot of charting information here on this stock. This hasn't been around that long. But we can go in and find a few things a little later. Find out the pattern that caused it to crash and my potential measured moves of the fall. But we'll get into that in a few. All right, so as you take a look here, you can clearly see that what we had going on here is the 20 EMA on the 4-hour started to roll over, and when it crossed negative, we had a dump. But not only that, the biggest scenario here is we had a double top and we had bearish divergence as well. You can see we came up here, and as you see the difference in the price action, we're lower on the left on the chart pattern and we're higher on the left on the RSI. That's bearish divergence. So that's something that you can keep an eye on if you're doing shorter term moves. And it helps you to know when something's going to come down. And it's something hard to find at first, but once you get good at it, it's very, very useful. It allows you to sell stuff before things crash and then look for a new position to find yourself in. But, not only did we create that, but we also, it looked like it was going to make a W here, so we did get some buying, but then we ended up just rolling over. So what happened here actually was we got a left shoulder, a head, and then this right shoulder actually dropped us down. So what we can do in this scenario is we find the measured move of the head and shoulders. And what you do is you take it from the head and you bring it down to the neckline, and not from the top of the head. I go from the inside. I don't know if there's a specific way, but I do go from the inside of the head always. And it seems to work. So I'm going to say that this is probably what you're supposed to do, but you can double check on that, but it's been working for me great, so I'm going to stick with that. And then you take it from the breakdown of the shoulder. Usually So we could say it's around 259, but if we wanted to be exact, we should probably zoom in here and find the exact breakdown, and we can figure it out. So I think if we put it about right here, this is that last candle before the drop right there. And look where it lands us, perfectly at this trend line. So that kind of gives me another good reason on why. Now, if you look at these moving averages in the 1 hour, they're all pointing down, the green, the red, and the yellow, and they're all crossing over the blue, which is the longer term. Now, of course, this is on the hourly, so it doesn't matter as much, but it is a good sign to show that we're going to continue downwards. And then once those start all crossing on every time frame and then start rolling up, then you can kind of expect things to start going the other direction. But for now, we'll look at the 15-minute for the hell of it. Massive sell volume. I mean, at the moment, if this was to bounce here, because we're pretty low on the RSI, we could get a little small bounce. It's not just going to crash completely to the floor. This could turn into a small little W potentially. A lot of people buy these dips the whole entire way down, and they just dollar cost average this whole way down because they don't know how to find potential supports or resistance. And I don't like to do that. That's how you basically lose your money. You start buying at this first part of this right shoulder, and then you average your way all the way down. By the time it gets to the bottom, you put fucking $3,000 into it, and you still have a shitty ass average when you could just be patient and wait for a potential bounce. So how you would look for a little bounce is, not only do you watch the RSI on the smaller time frames and slowly watch them grow, but you kind of want to look for the spinning top looking candle right here, kind of a cross indecision candle. Of course, if you just buy that cross, you can still see downside. So what you really want to do is you look for that cross, and the next candle you want to see it close at the same or at the higher with a flat bottom. So as you see, flat bottom here, that means the candle, the day, or that 4-hourly candle found a bottom, flat bottom, flat bottom. You see what I'm saying? At the bottom of the candle, it's completely flat. And then, if you get an indecision candle like you did there with a little wick below, as long as the wick doesn't come and break the trend that you're setting, which is why you would draw a line across all of the bottoms of those candles, and that would kind of be your breakdown point. But that could be something that just wicked people out quickly and then continued on its way up. So, you don't just sell an indecision candle just because you see one. You have to look for confirmations. And then the same goes for the tops of the candles. If you see that it gets stopped out like this on the candle, then potentially that's showing a sign of resistance. But, this is more candlestick analysis. I can get into this a little more. I'm still learning a little bit, so I'm not the greatest at it. I'm just starting to figure some shit out. But that right there is considered a spinning top, and when it's the top of the trend, usually it can signal a downtrend, and then at the bottom of the trend, it's the opposite. So that's why I'm usually looking for those for signs, but it doesn't always work out. So you do want to have a bullish candle after the fact as well. So where we are right now, as you see, we have the same kind of hanging man candlestick, which usually a hanging man, which is a full body, how it is there with the resistance at the top, and wick below. That usually signals more downside. And until you get an indecision and then a candle that shows that it created a bottom of some sort, usually green, and you want it to close higher than the indecision candle, then you can start looking for a potential of a bottom of some sort. So if you want to use, candlestick analysis to figure that out, you definitely can. As well as another thing I like to use is the RSI. So if you see at the bottom of the RSI how it's still pointing downwards, you do want to wait for that to kind of make a little V shape so that it shows that it did catch a bottom. And you can see this happening from the 15-minute candle all the way working up to the hourly, to the 4-hourly. So sometimes I'll watch for that quick V shape to show that we did get a bounce there. And you can either, if you didn't catch that specific spot, you could either wait for it to come back down and do a quick double bottom on that area using the RSI, or you can, potentially you could buy it. So yeah, as we talked about before, I believe, but either way, if we didn't, this right here, I still see us coming down more, but stuff's not going to go straight down. So it's possible that you could see a small bounce here, come back up, test that 20 EMA, and then work its way back down. But needless to say, on this thing, I am looking for those targets that we talked about, and I'm expecting more downside. I give you guys the targets and the stop loss positions so that you're not getting completely wrecked and having to, try to average down if you bought in at the 278 area and then you let it fall all the way to the 253 and continue averaging in, or 255. I forget what we talked about, but just hopefully you guys wrote it down or something. If not, just rewind the video and write down those areas if you're interested in this thing. I might be a buyer at that. I'll be a buyer at that area most likely. I'm going to keep an eye on it. If I see it below, I'll definitely grab some there because it seems to be the overall trend so far, and we've had 2 touches in its small life that it's had. And, these moving averages are still not looking too great. That daily's curving downwards, the yellow line there. So it still looks like it has potential to get pushed down further, even if it gets a small bounce like it did. It got a little bought up there. But watch for that next candle on snow because, like I said, it could be an indecision candle. And if it is, then maybe this will be the bottom where we are now, where we wick down and almost touch the support. Or maybe it'll come back down for one more touch, or it could fall completely through. So like I said, you could be a buyer somewhere in this 278 area, have a stop loss below that line, and then see if it's going to catch a bounce. And if the next is an indecision candle and the following is one of those bottoming out candles we talked about, then maybe you could get a bounce up before potentially getting pushed back down. It's too soon to say right now, but as of right now, I wouldn't be buying it potentially because I don't really like the way it looks yet.